to talk about today, there are three kinds of insurance. There's individual plans that you can get for yourself. There are group plans that you get through an employer, even if you are the employer. And then there's federally provided, state provided, government provided plans. The differences between each. Well, we all know what Medicare is. You hit 65, you qualify for that. If you're poor, you qualify for certain programs. There are a myriad of government programs. But for the bulk of us, less and less, more people are going for the government because they don't have the money and they qualify. But for the bulk of us, 80-some-odd% of us, we have to find a way to purchase our insurance, whether it's buying an individual plan or through your employer or through your spouse. So what you're looking at is deciding what's best for you, what you can get, and what you can afford. And a lot of times, they don't match up because most all of us want everything, and we want to pay for nothing. I mean, you want the most for the least. You don't expect it for free, but it would be nice. What we have to do as professionals is to analyze your situation and try and get you the best for the least. It's not rocket science. It's just sitting down, looking at the numbers, and knowing what your options are. And that takes time. There is no one right thing. How many people have been asked, whatever your profession, what's the best? You know, what's the best heater or air conditioner? Well, is it a commercial building? Is it, you know, a small house? If you buy something too big, it actually, you're hurting yourself. Same thing with health insurance. The right policy for the right person, everyone is different. So you guys have to take the time to invest in order to get what is really right for you. If you're not investing the time, then someone might sell you something, but it's not going to be the right thing. You're either overpaying or you're underinsured. And no one is going to know that until you sit down and you take the time. So with individual plans, you have to qualify for that. In other words, your health, etc., has to be acceptable to the insurance company. They can pick and choose. Well, if they can pick and choose, that means they can offer better pricing, because they can take the sick people, ignore them, so the pricing is less expensive. But they also can pick and choose the coverages, and when you're buying that, you end up buying a less expensive policy, and you go, woohoo, save $50 a month. And then you have a claim, and you find out, woohoo, I don't have coverage for chemo. You know, that is not something you want to learn on the fly. That all goes back to when you sit down with someone and you learn about the plan that you're buying. It's okay to not have coverage if that has been your decision. Because at the end of the day, regardless of the type of insurance, we're all insured. We're all insured 100%. How much of it is self-insured and how much of it you're paying the insurance company to take from you is up to the plan you've chosen. How much do you afford to self-insure? And whenever you're saying no to a coverage, what you're saying is, I can afford to pay for that myself or take that risk. Are you really willing to do that? And realize that every time you say no or you limit something in any insurance that you're buying, is the money that you're saving worth the risk that you're taking on? Or vice versa, is the money you're paying worth handing the risk out to someone else? Ask the tinctures. Dental insurance is about the crappiest thing you can buy. It's expensive and you get very little coverage for it. The most an insurance plan will pay is generally a couple of $1,000s a year, and you might pay $1,000 or more to buy $2,000 of coverage. So you're paying $1 to get $2 back at the most, as opposed to a life insurance plan that might cost you $10 or $15 at best for $1 million plan. Well, $15 for $1 million versus $1 for $2. What's a better investment? So when you're looking at your overall expenditures, you have to look at the risk-reward for everything. And when you start saying no, take a step back and say, where am I wasting the money and getting a very little return? Why don't I shuffle that money over to something that's going to give me a good return, or at least where I feel more protected? The best use of your money. And all of that is just sitting down with a calculator, figuring it out. And only one person can really do that for you, and that's yourself. When you bring people in, financial planner, health insurance, farmers, for that, we're assisting you. But at the end of the day, who knows what you've gotten in every area? And only you know. And what you need to do is to take the time and make us work for you. Does that make sense? Anybody have any questions?
How often should someone be reviewing this if they already have it in place?
Once a week. Ideally once a year, or when there's any change in your life. Anything that comes up that might make a change, there's a domino effect. So when you get married, when you get divorced, when anything key happens in your life, that's when you review it. Now, go ahead. I'll go to the second part. I mentioned individual plans. Group plans are where a business is buying coverage. Now, a business can be actually down to one person. Technically, it's two people, but only one person really needs to buy. And unless you don't know anyone and have no one in your life that you trust, you can find a second person that you can at least help you create the entity. We're all business people, so we all need a business entity of some sort. That business entity can purchase health insurance. And as a business entity purchasing health insurance in California, it's guaranteed issue. So if you have problems getting coverage on an individual basis, it might be a little bit more expensive, or a lot more expensive, but you can guarantee that you qualify for group. So again, when you're talking to a professional, they're going to analyze your situation and say, I have an idea. Let's do this in order to get you the best for your needs. And whether it's individual plan, a group plan, or if you actually do qualify, you've just started your business, there's no income coming in, and you don't really have that many assets. I know that doesn't apply to any of us here, I'm sure. But there are government plans. For example, instead of adding kids, there's healthy families. It's $15 a month for basically 100% coverage HMO. And if you have kids under 18 in the household, and you don't want to spend that money and you want to invest it getting your company up and running, you know what? If there's something out there that you can use, do it, right? And then you use it not as a crutch, but as a way of building yourself up to a point where you can be independently wealthy and buy everything you need. But in the meantime, there are all these things available, and instead of educating you to all of them, what I'm trying to do is educating you on just enough to remember to ask and make us talk to you on an individual basis and give you what you need. Last thing, when it comes to rates. Rates on a group plan, you contract for a year. The insurance company is obligated for a year, and the rates are locked in, and every year you renew, and you're in 1-year contract. Now, you as a buyer are buying it month to month, but the company is locked into it for a year. On individual plans, you buy it, next time you make a payment, that bill might be higher. They can raise it whenever they want. When you first buy it, sometimes there's a little guarantee for a short period of time, but after that, they only lock it in for how long you paid for it. If you'll notice, they don't offer the 3 or 6 month payment options, and they don't do that because they don't want to cut their own throat. They want to be able to raise your rates next month if they feel like it. So, and coming up July 1st, maternity is being required on every plan. So if you didn't have maternity in your plan, the rates for your plans are going to go up quite a bit. That's going to be artificial. It's not like rates for health insurance have gone up, but rates for your plan have gone up. So you need to talk to someone to reevaluate your needs. Now is a good time if you're getting those rate increases. So talk to Brad, talk to Brad, talk to Brad. Any other questions? Yes.
We have the new Obamacare. If there was something to do with your children can now get coverage with you
Up to age 26,
Okay.
whether they're student or not, whether they're living with you or not, you have a child up to age 26, you can add them into your plan. So is that completely done?
Yeah, but you have, you usually do it like a minute
Sure.
or two, or a question and
Yes,
answer.
Kevin?
Do you get a health insurance benefit at like a young age, let's say you never change it, because it's good for you, as you get older, do they increase it automatically?
You pay the same rate as someone brand new on that plan. Every time the rates change for everyone. The only thing that can happen is, not to your benefit, but you can get screwed. Because what can happen is, that plan might be grandfathered, they no longer sell it. So the only people in it are people that have been on it a long time, and they raise the rates on those quite a bit. So you're stuck in it. If you're healthy, you can qualify for a newer plan and move. But if you can't qualify for anything else, they've got you locked in, and they can raise the rates to whatever they want. And there's one carrier that does that all the time. They're always dropping plans. They keep them, they no longer sell them as a new plan, but if they keep raising the rates 30% at a clip, and if you complain about it, the agent will move you if you're healthy, but if you're not healthy, you're stuck. So no, you should always be analyzing your plan, or once a year. Yes.
On that note, isn't there, and we talked about a class action lawsuit going against one of the carriers that allows certain grandfathered plans to move without underwriting right now at this point?
To tell you the truth, I don't know of any one particular suit. There are all kinds of suits all the time. Because I sell insurance, that doesn't mean I like the companies. I don't believe in insurance companies. I hate them. There's a big philosophical difference with some other people here. I sell a necessary evil. Yes, they pay my paycheck, but that doesn't mean they're good people. Insurance companies, there's no such thing as good insurance. I try and sell you the least worst. Yes.
Let's say you have a child 26, and she has all kinds of pre-existing problems when she turns 27.
Yes.
She can't be on your policy. Will she be able to get into the
She can
policy?
continue on that plan as long as she's individual. She's insured, she's on that plan. And one of the government plans that we hadn't mentioned was pre-existing conditions insurance plan. But the only way you qualify for that is going 6 months without coverage. That being said, there are 3 or 4 different ways of getting it, including starting your own group at the worst, and then she's covered under that. So, Chuck?
Just curious for clarity, why is it for single males now that take out a plan? Why are they gonna have to pay for maternity?
Takes two to tango.
That's right.
I understand that, but beyond that, I mean,
Well, it's one of those...
Yes.
One of those catch-22s, in California, you cannot discriminate by sex. So they have to unisex rate.
it just seems so unfair.
Time off, just like women do now, in a lot of coverage.
Yeah, but health insurance doesn't pay for time off. Health insurance only pays for claims. But as a parent, you can actually add a child to your policy. So they're stuck with the child now. And whether you have maternity or not, you're not having the baby, but as a parent, when that baby is first born, you can add that to your plan. So that can be an issue.
So
That
you
being
can add
said,
independent to the single male, can add independent to his coverage. He can change his coverage.
he can change his coverage, but he's not going to be able to change it to something non-maternity anymore in California.
Right. Okay.
And if you have further
Good job, man.
By the way, don't blame Brad for the premium increases.